Hello, welcome back to another video. In today's video, we'll observe some examples of fair value gaps known also as price imbalances, and we'll learn how to trade continuation fair value gaps on a bullish market to make money, not to lose. Continuation fair value gaps, FVGs, are imbalances created during strong market momentum, where price moves aggressively in one direction, leaving behind inefficient price delivery. These gaps often act as continuation zones, meaning when price revisits them, the market tends to respect the imbalance and continue in the original trend direction. Traders use continuation FVGs to identify potential pullback entries, trend confirmations, and high probability continuation setups within bullish or bearish market structure. As we can see, price comes from a ranging move, have an impulsive drive up, start ranging at higher value, then push another leg up, leaving beside some bullish imbalances. In this case, bullish trend is confirmed, and we can use the last imbalance form for a potential entry to trend continuation, and we can see how the price is unable to push lower and this imbalance is acting like support for the price. We can set a long, typically from the middle of the imbalance, stop loss depending on your risk management. Typically a good area is below 50% of the up move, because on a trending market, price does not have deep retracements and a 2 risk reward ratio position is pretty safe from the experience. Same behavior can be observed for the next up leg. We can see how the price after expansion higher is unable to push lower, and this imbalance is acting like support for the price. We can set a long same approach like previously, stop loss below, middle of the expansion leg, take profit 2 risk reward, and wait for the market to do the job. A really important thing for this strategy to use continuation fair value gaps is the fact that market trend need to be identified correctly and to be bullish. If these conditions are meet and success ratio for this usage of the fair value gaps, for then continuation is pretty high. Important is that the trading need to be made with a good risk management, because every strategy has some weak points and also is not 100% success ratio. As we can see, because the trend was identified correctly, these two position was winning, and is good to not push the limit and force every imbalance for continuation, because always is a reversal. Next episode we'll talk and present continuation imbalances, but for the bearish market state. Till the next time, don't forget to like, comment, share, and leave your thoughts on comments section. Be safe and trade responsible.